the bread and butter of our strategy. Market structures, right? This is what every single strategy is reliant on, right? This is the foundation of every single strategy. You can forgo everything, but you cannot forgo market structures. This is the most important strategy in any in any concept. You need market structures. Now, what are you talking about? What am I talking about? Okay, so we're talking about higher highs, so let's say there was some structure here already. Higher high, higher low, higher high, higher low, higher high. Oops, you broke down. What is this? Lower low, lower high, and lower low. Okay? Kinda simple, right? But what if I told you, right, that most of the traders, this is where they mess up. This is where they mess up. Some of my mentees, they know the strat and everything, but this is where, they mess up. Because it's not as simple as you think. Okay? So, I'll give you my secret sauce. Assumptions. Right? No. What the hell are you talking about, Javi? What the hell are you talking about? Assumptions? Okay. Let's get into it. When we make higher highs and higher lows, what is the assumption? Any 4-year-old can tell us what this is. This is a bullish trend, right? Probably not a 4-year-old, like let's say an 8-year-old, right? This is a bull trend, right? And you can tell me in 4 seconds that after a higher high, we're looking for a higher low, right? Now here's where the assumptions come into play. So you assume after a higher low, we get a higher high. And after a higher high, we assume we get a higher low. So let's say you have a trade here. Say you have a trade, right? Let's just say this price action is not known yet. So you have a long here at the higher low. Then the assumption after a higher low is a higher high, right? So with certainty, you know that price will go there. Therefore, your take profit target will be, the highest probability, right? That's just how it is. Assumptions. After higher high, higher low. After higher high, higher low. After higher high, higher low. After higher low, the assumption is a higher high, right? Very simple. Now here's where things get quite interesting. Let's talk about failed structures, shall we? Okay. Now, under that is a failed low is bullish, and a failed high is bearish. Right? These concepts may be, you might be saying, "What the hell are you talking about?" This may be the first time you see this, right? But very important. Okay, so let's tie everything together. Higher high, higher low. Higher high. Let's say there was a structure here. That would have been your higher low. Let's say you have a structure. However, what happened? You created a lower low. Okay? Created a lower low. And manipulation happens quite frequently in the crypto market. So, okay. You accept it. Fine. Now, after a higher low, or let's say this is still a key level, we see a lower high form, right? And the assumptions alone, this will tell you that after a higher high and a higher low, what happens? You're supposed to break structure to the upside and create another higher high. However, you created a lower high and another lower low. Therefore, our bullish trend is invalidated, right? This looks quite easy, so let's make it hard. Higher high, higher low, higher high, higher low, higher high, higher low. Ooh, what is this? Lower low, lower high, lower low. Okay, now things are getting a little tricky, huh? Let's analyze it. Higher high, higher low, higher high, higher low, higher high, higher low. Okay. So, using the assumptions, right? Using the secret sauce. What is the assumption after a higher low? Right? A higher high, right? A higher high. However, what happened? Instead, we got a failed high. So, this structure alone can tell you, okay, so we have a failed high, and based on our assumptions, we're supposed to get a higher high. Therefore, what did I say? A failed high is bearish. Okay? Let's say you don't see any of this price action just yet. We're only here. Failed high, therefore there is a high probability chance that we run this low and create a lower low. Now suddenly, our bullish trend that any 4-year-old would notice is a bullish trend has now been invalidated. So now we're starting that lower low and lower high trend, which is bearish. We're now starting the bearish trend. So we get this lower high, sorry. We get this lower high. And based on assumptions, okay, what if you had a short position here? Because you saw this failed high followed by a lower low. Based on assumptions alone, you'll be able to target this lower low, this low here, as we create another lower low. Okay? Very simple. Now, inversely, after this failed high, suddenly we get a failed low. Why is it a failed low? Because it failed to create a lower low, right? Simple. Right here. What did I say? A failed low is bullish. Okay. So, if you're watching this price action and you see a failed low, it can already give you a sign as to what happens next. Which is, guess what? A higher high. Interesting. Do I want to position? Maybe. Sure. Take a long here. At the higher low. And guess what? With assumptions, the target should be a higher high, which we actually get. Right? This is how things should look like. So let's get in the charts, shall we? Okay. Let's bring in our trusty sauce. Okay. So without strategy, without anything, let's just identify structure. Okay. So let's say we see this candle body, right? Body equals continuation. Okay. So higher high. Now this will be our higher low. This one right here. They break structure again. Higher high, higher low. Higher high, higher low. Right? Let's say you wanted to position at the higher low. Let's just say you already have a target, which is a higher high. Right? This would be an easy target because you know, based on assumptions, right? Based on assumptions, right? You'll be able to, guess what? You'll be able to have a valid exit target, right? So we get that. Make another higher high, and we get a higher low. Guess what? Position again. Now, can you tell me where the take profit should be? 3, 2, 1, right here. Right? We make another higher high. Right? Very, very simple way of looking at things. Based on assumptions. The assumption after a higher high is a higher low. Right? Nothing's linear. Things just don't go higher high forever, right? Things have to pull back. Right? So after this higher low, what's the assumption? Higher high. Okay? So here's the thing. We see this, right? Talking about candlestick anatomy. It gives you the initial clue. Okay? It gives you the initial clue. So suddenly, we break this. And now what? This bullish structure has now shifted bearish. Okay? Suddenly, you have a lower low. This lower low. After lower low, what's the assumption? Right? What's the assumption? A lower high. Okay. And now, we made another lower low. Lower low. Okay? This should be the lower high. Okay? So, can you tell me, is this a lower low? I'll give you 5 seconds. 5, 4, 3, 2, 1. No, it's not. Because we didn't break this. So now, that's what you call a failed low. Failed low. So if you were shorting, you would have stopped shorting, right? Now, what happens next? Suddenly, at this point, we broke structure here. Now we're at the higher high. So admittedly, things are kind of choppy, right? So let's just continue. Higher high, higher low. Mind you, we still haven't broken this, so it's still valid. Higher low, higher high, higher low. What's the assumption? What's the assumption after a higher low? Right? The assumption is we create another higher high. But what happened? Did we? No, we did not. This is a failed high. Now, what again happens if you see a failed high? Is it bullish or bearish? It's bearish. And true enough, we get this massive sell-off and suddenly making new lows. However, this can give you another signal. We're making new lows, however, it's just a wick, no body. So, if you've been listening to me this far, right? If it's just a wick, is it a continuation or a reversal? Interesting. It's a reversal. And what do we get? We get a reversal. So, what now? Right? Suddenly we have a higher high. So this is the lower low. The lower low, we get a lower high here. And then we are unable to break this low. Unable to break this low. Right? If this was truly a lower high, then this would have broken through. But we get a failed low over here. Uh-oh. Uh-oh. What does that mean? Failed low equals bullish. So, first sign of bullishness is here. Right? We break this lower high. Now we made a higher high. What's after a higher high? A higher low. Suddenly we have a trade in our hands. You buy. Suddenly you have a trade in our hands. And suddenly, right? So now we've made another higher high. All the way up here. Right? Supposedly this is our higher low. Now the thing is, this is a failed high again. Because based on assumptions, okay, what's our assumption? After a higher low, you're supposed to be making another high. We get a failed high and a sell-off. Right? Now you can try this by yourselves, right? You can see market structures, right? In any coin that you choose. This is Ethereum. You can try Solana. You can try Bitcoin. The same thing, right? The failed high concept, the failed low concept, right? The assumptions concept, secret sauce. I suggest you guys try it on your own. I suggest you guys put this to heart, right? Put this to heart because what I want you to do is to think of price action as a story, a narrative, right? If we make consistent higher highs and higher lows, then the bulls are winning. The bulls are in control. However, right, if we get that first sign that the bulls are not in control, like the bears are fighting back here at that failed high, they can already tell yourself, okay, maybe the bulls are losing steam and, you know, the bears may be taking over. And sure enough, it does. Right? So when you look at price action, I want you to tell me what the story is. Are bulls in control or are bears in control? Because if you know who's in control, then you would know how to position yourself. Okay? Very simple. Very, 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 very simple. Okay. So now, let's talk about market sessions.